of Zephyr Financial Publishers Private Limited that has the website inrbonds.com and investorsareidiots.com. inrbonds.com is an India-focused fixed income market content-based website and is purely a subscription-based content provider on all aspects of Indian fixed income market. inrbonds.com conduct training and knowledge workshop on financial market exclusively for employees of asset management companies. INR Parthasarathi training program includes 3 months of fundamental training on fixed income, currency and commodities market and domestic and global macroeconomy, which provides a platform for participants to relate the dynamic market and economic environment. Up-to-the-minute analysis of the important event and that affect markets enables sales team to deliver value to client, leading to more client business as they beat competition in terms of client engagement. The clients such as ICICI Prudential, DSP BlackRock Investment Manager, Tata Asset Management Company, Birla Sun Life Asset Management Company and UTI Asset Management Company have fully undertaken and continue to undertake training on a continual basis from us. We conduct knowledge workshop on liquidity, interest rate, credit spread and bond fund, and it continues to receive good response from the industry. A brief profile of Mr. Arjun Parthasarathi, who is the speaker for the day. Arjun Parthasarathi has a 20 years experience in financial market. He has worked across platform of fund management, proprietary trading and research and across segment of equities and fixed income. He has worked with reputed institutions including Citigroup, IDFC Mutual Fund, Sundaram Mutual Fund and IDBI Bank. He has done his MBA from University of Hull, UK and MA in Economics from the University of Pune. He has authored the book The Rich Investor published in 2012.
Thank you for attending the third knowledge workshop on opportunities and risks on gilt and credit curves. I know to some of you it might sound a little exotic, but the basic idea is that the bond markets in India are now looking to enter a bullish phase, and this is after a long period of time. We have almost had a 10 years of bearish phase, except for brief interludes going ahead in between. But there's been a structural change in the way inflation, interest rates and government finances have behaved, and now there is a positive outlook on things going forward. And given that and the fact that both at the institutional level, at the investor trader level and fund manager level, as well as at the retail investor level, bond funds or anything to do with mark-to-market securities have not really captured their imagination as of now. And now if you are looking at a period where interest rates are going to steadily fall, if inflation expectations are kept down, the government handles its macro well, etc., then you do have a very strong case of a long period of falling interest rates, falling bond yields. Maybe you will come back to what it was 10 years back. In fact, the markets, while the volumes have increased, etc., if you look at issuances, if you look at spreads, if you look at trading volumes in relation to market size at that point of time, they were much, at least about 5 to 6 times more active than what it was now. So if it does pick up, then you do have a very strong case for sustained positive trend on interest rates, maybe on credit spreads going forward. And so I think we are at an opportune time to actually start talking about interest rates, to start understanding how what drives what factors behave, what are the opportunities that exist for both at the investor level, at the institutional trader level, etc. So this workshop is divided into 4 sessions. The first session I'll be taking you through India macro, global liquidity, global funding curves, then the rupee and how does it attract capital flows. Second session will be on government bonds and corporate bond yield curves, how to look at yield curve shapes, how to look at credit curves. The third session, which is after lunch, will be on the opportunity that is offered in gilt and credit curves, which is corporate bond and government bond curves. And the fourth session will be divided, is a team activity. So starting off with the first agenda for the first session is India's improving macros, global liquidity, global yields and funding currencies, INR values, carry trades and debt capital flows.
There is a haircut after.
And this is a pure way to take exposure to GSEC. Some people are not very comfortable also, going into pure GSEC funds. Volatility is much higher.
So people are not taking much risk on this particular side.
There are those kind of the other one, the one which was seeing before this. Yeah.
You'll search for it.
Clients are
Definitely.
Hello friends, this is a typical open-ended dynamic bond fund portfolio with a portfolio construction of 70% in GSEC and rest around 28% in liquid bonds, liquid or maybe a semi-liquid bonds. It is highly liquid and well accepted, and at the same time it is giving a higher carry.
What is the tenor of that?
This is a 10-year,
10-year.
2024.
Okay. What is the yield on that?
That yield initially was 960. The coupon is 960 semi-annual, and now the yield is in the range of, I think, that is the theme of this portfolio. There is no lock-in period, of course. So, if any sales pitch,
Yeah, the applications are available. Anybody interested can